Buying a home in California has completely changed. It's no longer about finding the right house anymore. Today, your mortgage approval could be affected by the insurance. Your property taxes could change overnight. The home you're looking for might suddenly get rezoned for an apartment. Even the listing photos that you're looking at online through Zillow or other websites might require AI disclosures. California has very quietly passed some of the biggest housing-related changes that we've seen in years, and nobody really knows about it. And whether you love them or hate them, these new rules are going to affect you, whether you're a buyer, seller, investor, or even a renter. So today I'm going to break down the laws that actually matter, what they mean to you and your wallet, and what ultimately you should be paying attention to if you are looking to buy. So before we get into that, guys, if you could do me a huge favor and please smash the like button and subscribe to this channel so that we can reach you with more content like this. My name is Arjun Dhingra. I'm a mortgage banker and content creator for the industry for the last 25 years, most of them right here in the San Francisco Bay Area. I love helping people break into tough markets like here in California. And we've helped thousands of families over the years and investors put down their roots here or just acquire income producing property. So if you are looking to do the same, or you're curious about how this market works, reach out to me on Instagram at Arjun Mortgage. Me and my team would be honored to help you put together a strategy, talk details, a long-term plan, short-term plan, whatever you need and where we could be of help to you to help you navigate this tricky state. So let's first start with one of the rules that has surprised a lot of Californians over the last few years, and that's property taxes, Prop 19, and the next battle ahead. Now, guys, as a quick refresher, for decades, families could inherit a home and keep their parents' low property tax basis. Prop 19 changed that. Today, if you inherit a home and don't make it your primary residence, the county generally reassesses the property to current market value. So for many families, that means a property tax bill that jumps by thousands or even tens of thousands of dollars every year. Now, here's why this matters, guys, because some people may listen to this and think, well, I paid off my mortgage years ago. But property taxes never disappear, guys. They are part of your housing payment forever, whether you have a mortgage or not. And if taxes suddenly increase, your monthly housing expense does too. Now, when it comes to mortgage, here is something that a lot of buyers don't actually consider. When a lender like me qualifies you for a home, we are looking at your full housing payment, not just the principal and interest payment, but the taxes, the insurance, the HOA dues, if there's PMI that's going to be on this loan. All of that factors into your overall qualification. So higher property taxes can absolutely affect your debt to income ratio and ultimately cut into the amount that you're approved for. What that means in English, guys, is that your purchasing power could actually be decreased. Now, it bears mentioning there is a recent ballot initiative and a discussion around expanding tax relief for Californians who are older to help reduce displacement. Now, whether or not that passes, property taxes are becoming a huge part of the conversation, unlike in previous years. Now, here's my take, guys. I have seen countless amounts of buyers obsess and spend so much excessive time focusing on interest rates. Nobody talks about property taxes. Sometimes, particularly here in Northern California, property taxes have more of an impact on your mortgage payment than 1/8% in interest rate. But if property taxes are becoming important, so too is insurance. In fact, it might actually be the biggest issue now facing buyers. So it is no secret, guys, that California has an insurance crisis. It's no longer just another closing cost. Getting it, for starters, is very difficult. And because it's become so difficult, it's often the reason that the deal falls apart. It's almost like qualifying for another mortgage. Premiums have risen dramatically. Some insurance companies have pulled out of the state because of the goalposts constantly being moved, their fear of natural disaster, and the inability to actually pay out if enough claims were filed. And so what's happened is that many buyers are forced into the California Fair Plan. Now, here's the Fair Plan in simple terms. Think of it as the last resort insurance stop that you can make as a Californian. It's designed for unusual situations, and unfortunately, it's becoming much more common. Now, I say unfortunately because when there are fewer choices, the quality of insurance and sometimes even the cost is something that's not really desirable. When there are more options and more places to choose from, that empowers the consumer, and that's better for the market. But because this sometimes ends up being the only game in town, the Fair Plan actually gets more expensive. And this is why wildfire exposure matters and why ultimately carriers are becoming very, very selective here in the state. Now, it's sad to say, but this is happening a lot in mortgage. I'll tell you guys a brief story of a buyer that was looking at acquiring a 4-unit property. Now, because the building was old, it was very difficult to insure. Normally, in years past, we're not even concerned about this because there's so many options and so many ways to insure a building that we know we'll find something. But we couldn't find anything, and in fact had to go with a very rare and kind of unknown carrier that provided the appropriate insurance, but it was really expensive. In fact, it was expensive AF. if you follow me. And so much so to the point that it blew up the deal because it made the buyer's debt ratios fall out of line. They weren't in a position to be able to put down more money to offset this increase in overall expense. And we lost the deal. The clients lost the property. Not because they couldn't qualify for the mortgage on its face, but because the mortgage actually didn't work once we factored in this ridiculous insurance cost. And so this is happening, which is why it's really important if you're a buyer to actually do your insurance homework as early in the process so that you can figure out other options and contingency plans as opposed to just considering it as an afterthought and just getting it towards the end of your transaction. Okay, so now let's talk about the other side of the coin. Let's shift from talking about trying to own a home to if you are looking to rent one. Now, there's a real reality check going on here, guys, between the reality around housing and wages. So California increased minimum wage, and that's good news for many workers. But here's the challenge. Housing cost or rental rates have increased at a much faster rate than that increase in wages. So for example, guys, if rents are continuing to climb faster than wages can keep up, affordability or this gap in between still gets worse. This is why many renters still feel like they're falling behind or they can't compete. And then they ultimately think that home ownership is even further out of reach because if renting feels like a pipe dream, how can they even begin to think about owning a property? They get saddled with thinking about having to save for a down payment, dealing with higher rents, higher insurance costs, higher utilities, higher everyday expenses. And this is something I want to share with you guys here because I feel that our industry does a huge disservice, and the real estate industry for that matter, of using the expression or the term a dream home. People think that the home that you go out and look for is going to be the one that you're going to live in forever and that it needs to meet every checkbox, be perfect. And let's be honest, guys, that isn't the reality, especially here in the California market. The home that you get into is a starter home. You'll make some concessions. You'll give up some things that were on your list. It's kind of like dating. There's no perfect situation. Just focus on what's important for you right now. And is it something that you can grow with? Remember that for both real estate and dating purposes, guys. Sometimes buying a smaller condo or a starter home is going to give you more affordability, but better upside because that property will increase in value. You can then take that money and roll it into something more expensive or larger. So you build equity instead of waiting for perfect circumstances. There's an expression that you just get on the property ladder and then you keep climbing. And that really applies here, guys. Just get on the ladder. So if affordability then is not quite the problem, California's next laws are trying to attack the supply side. Okay, now let's talk about zoning and California Environmental Quality Act changes, or CEQA. Now here it is in English, guys. California is trying its absolute best to make it easier to build housing. They know what the problem is, especially near transit. And it's reducing some of the approval hurdles or permitting process that has delayed projects for years. This means more density, faster approvals, less red tape, even costs, and potentially all of this leading to more housing inventory. Now there's two sides to it, just like everything, particularly in California, which is a really polarized state when it comes to pretty much any issue. There are some people that love this, and there's others that believe local communities are really losing control here. Regardless of your opinion, more housing supply has been one of the biggest needs for California for decades. Nobody can argue that. But for builders, developers, and long-term investors, this has the potential to create major expansion opportunity over the next few years. But that's not the only area where California is really embracing change now. And I'm talking about AI, consumer protection, and transparency. So first, let's talk about AI photos. Not for dating profiles, because you can sniff those out a mile away, but actually when it comes to looking at real estate. Because today, AI can completely transform a listing. It can remove power lines, change the landscaping, increase the curb appeal, stage empty rooms, even change the lighting. So California buyers want to know if something's been materially changed before they go out and actually look at this property. They want to know what they're getting into. Just like you would want to know, is that really that person's dating profile pic? Or was it from 10 years ago when his hairline was much better? You guys get the point. Personally, I think transparency is a great thing. Photos should absolutely help buyers, but they need to be accurate ones because we don't want to mislead anybody, particularly for the largest purchase of their lives. Now let's talk about algorithmic rent pricing. California is also trying to prevent software from artificially pushing rents higher. This is a real problem. Now, whether these policies ultimately succeed, guys, remains to be seen. And we'll continue to track it here on this channel and I'll report back to you. But affordability clearly, guys, from everything we're talking about in this video, is becoming a major legislative priority. The state wants to tackle it. They're talking about it. And not just at the state level, just watch national news. Even the president's postponement of signing this new national housing bill sent everyone in the media into a frenzy because he's holding housing and affordability hostage. But let's leave the politics aside for a moment, because there's probably some jockeying or positioning or chess playing here that's actually going on with that, because ultimately that bill will take effect. It's just a matter of timing. There's also, and we can't forget this here in California, guys, wildfire protections. This is protecting homeowners after disasters from aggressive investors. And simply put, guys, this has nothing to do with politics. It's just consumer protection. This was very common during the Santa Rosa fires up here in Northern California from years ago. A lot of people were just left stranded, still waiting on an insurance payout to either rebuild or move on with their life. Nothing ends up happening. Then you have predatory investors coming in and offering people money just so they can move on with their lives. So that is the consumer protection that I'm talking about. So my personal take here, guys, the technology is not the problem. The lack of transparency is. Whether it's AI, insurance, or lending, consumers deserve to know exactly what they're getting into. And finally, let's talk about something voters are going to be deciding this November, and that is the Great Housing Bond. California may vote on one of the largest housing investments in state history. Potential funding for affordable housing, veteran programs, infrastructure, new construction. Now, this will not solve the California shortage of inventory overnight, but increasing supply is a huge part of the puzzle. California needs more homes because with more homes, more choice, you get price relief. And that's very difficult to argue against, considering this has been the biggest barrier here in the state. So what are the big takeaways here, guys? These are not random laws or policies or rules that are being discussed. Everything is connected. Property taxes, insurance, housing supply, artificial intelligence, consumer protection, affordability. California is trying to solve its incredibly complicated housing problem from multiple directions. It's trying to attack it with as many weapons as possible. Now, just like everything in life, guys, some policies will work out better than others. Some will probably need revisions or tweaking after the fact. But ignoring these changes is not an option for you if you're a buyer, or if you're selling, or investing, or even renting in the state. And that's why we created this video today, guys. My job is not to tell you whether every law is good or bad. If you want more of my personal feelings on some of that, you can follow me on Instagram and you'll catch my riff there. But my job here is to tell you how all these rules and laws impact your ability to buy, to qualify for financing, and ultimately build long-term wealth. Because headlines come and go, but smart financial decisions will have an impact on your life for decades. So if you are thinking about buying a home in California this year, 2026, don't just look at the purchase price. Review the entire picture and make sure you're talking to a serious mortgage advisor that can guide you with this. Taxes, insurance, monthly payment, loan options, and strategy. Because the right mortgage strategy paired with a competitive interest rate with long-term vision is always going to be much, much better for you than just chasing the lowest rate paired with the wrong or sometimes even no strategy for short-term gain. That's how people get hurt in real estate. Now again, guys, if this video helped clarify anything for you, or if you just learned something new today, please make sure to hit the like button and subscribe to my channel. It would mean a lot. And again, it helps us bring forth more content like this for you, but also help reach more people that are in your shoes. Now in the next video, we're gonna be diving into something that nobody is talking about here in the state, and that is the AI data center boom and how it has quietly been making California real estate even more expensive. Thanks for watching, guys, and we'll catch you in the next video.